You gotta be flipping my flapjacks. Oh my gosh, do we have a lot going on in this market, folks. So many stocks to talk about, so many earnings just dropped. Gotta give my perspective on these earnings. Here's our rundown. PayPal right off the top. This is the one everybody wants me to talk about. We're going to go in depth on PayPal, exactly what I'm thinking. Do I like the earnings? Do I not like the earnings? Conference call, the new CEO, all that stuff. We'll talk about all that in depth. Where I actually want to start today's video is showing you the setup for PayPal going into these earnings. I always think about how's the setup going into these earnings. Is it bullish? Is it bearish? Kind of lets me know the vibes of the market a little bit, right? And so in regards to the setup for PayPal, extremely bearish. The 1 month chart is down over 12.5% just in the past month, right? So clearly there's no excitement whatsoever going into these earnings for PayPal. No excitement. If there was any blip of excitement going on into these PayPal earnings, the stock would be up at least a decent amount going into these earnings. The fact that we're down 12.5% the past month shows there's no excitement. But this next chart I think is much more telling on what's actually going on. Check this out. This is a 1 month chart for a lot of the other fintech related companies. So I threw in Square in regards to this, which Square owns Cash App, right, which is a competitor to Venmo. I threw in Upstart. I threw in Affirm. So other fintech companies, right? And if we see all these stocks have been hit here recently, Square's down 9.5% or so in the past 1 month. Obviously, we spoke about PayPal, 12.5%. Upstart's down almost 16% in the past 1 month. And if we look at Affirm's down over 16% in the past 1 month. All of these fintech companies have been devastated here for a while and just continue to get obliterated here in the short term, right? This is 2 years of brutalness. I backed this up from about 2 years ago or so. This is all these fintech companies peaked around October of 2021. And since that time, folks, it has been, just brutal is the way I can describe it, right? PayPal's down 78%, Square's down 82%, Affirm's down 87%, Upstart's down 92%. It's been just 2 years of brutal action for all of these stocks that are in the fintech space. They all just have gotten absolutely obliterated, nasty style. Now, this, if we go back to the tech bubble, right, which if we go back to the 2021 market, that was the closest thing we've ever seen to a modern day tech bubble, right? Because the tech bubble was a moment in time when companies' valuations got way too stretched. They went to insane levels. Everybody was only looking at the bullish thesis in regards to stocks in general, and we had a blow off the top situation. Now, the situation we had in 2021 wasn't as dramatic. One, valuations didn't get to as high at levels. Two, at least you had real business models with substantial revenues in the 2021 market versus a 2000 market where it was just like, how many eyeballs can we get on this website? At least these companies, even if you look at all the fintech companies, all those companies have actual users, actual revenues coming in through the door, and all those sorts of things, okay? So not as dramatic, but still, if we go back to the tech bubble and we see how long did the tech bubble, how long did the NASDAQ fall for, we find that it was about a 2.5 year drop. Okay, 2.5 year drop. The NASDAQ peaked in March of 2000, and then it finally bottomed out in September of 2002. So it was a 2.5 year drop. Now, when I show you these fintech stocks, folks, these stocks have been brutalized for just over 2 years, right? Which is very in line with when we bottomed for the tech bubble. So I would say all of these fintech stocks, not just PayPal, but I think all of these fintech stocks likely bottom in the next 6 months. That's what I would say overall. And it's a very high probability a lot of them are going to bottom in this current quarter we're in right now. So do keep that in mind. Now, here's where we need to split PayPal from the rest of the fintechs. And this is extremely, extremely important, okay? PayPal's been brought down with all these companies, but there's a massive difference between PayPal and all these other fintech companies. Let me show you what the difference is. Robinhood, negative EPS. Rocket, negative EPS. Affirm, negative EPS. Square, negative EPS. Upstart, negative EPS. Coinbase, negative EPS. SoFi, negative EPS. PayPal, money printer. Money printer. They are Jerome Powell's money printer, okay? Let's call it that. So this is where the stock market gets a little silly and a little ridiculous. They throw all these stocks together. These stocks are not equal. PayPal is not equal to Affirm. It's silly. But when you're in a group with all these stocks, you get grouped in together and you get obliterated with the rest of them. Despite this one having a massive difference of being a money printer versus everybody a money loser. That's silly. And the way I would describe this and how silly this is to group PayPal in with the rest of the fintechs, which is the only reason really PayPal's fallen. If you want to know why PayPal's fallen so dramatically, it has nothing to do with margins and cash flows and all the other BS that people are going to try to put it on. The reason that stock has fallen like 80% is because it's grouped in with all the other fintech stocks that are also down 80 to 90%. It has nothing to do with the numbers. It has nothing to do with the old CEO. None of that. It's all baloney. It's all baloney. They'll make you believe it was this or that or this or that. It had nothing to do with any of that, folks. It's all a bunch of baloney. It's the bottom line is this is a fintech company grouped in with other fintech companies, and all the other fintech companies are down 80, 90+%. And so throw PayPal down as well. It's stupid. It's not smart, folks. It's equivalent of saying, hey, you know what? Meta and Snapchat, they're the same company because they both have social media platforms and they both have advertisers, so they're the same. No, of course they're not the same. One company is massively more successful than the other. One company has a way different executive team, a way different balance sheet, a way different income statement, way different users, way different amount of time spent on their platform. They're not the same company. Saying PayPal's the same as all these other companies is like saying Amazon's the same as eBay. No, of course Amazon's not the same as eBay. Well, they both sell things online, so they're all the same. No, that's silly. It's like saying NVIDIA is the same as Intel. Well, they both sell chips, so they're both the same. No, of course not. NVIDIA is its own game. It's its own income statement, its own balance sheet, it's its own products, and Intel is as well. And so to throw PayPal in with these other stocks is nothing short of ludicrous. It's nothing short of a horrible decision by Wall Street. You can call it the machines, you can call it Wall Street, whatever it is, but they made a horrible decision here, and it creates insane arbitrage for an investor like myself. And I think we're going to see that play out over time. Now, to go to the numbers and why I'm not scared at all, okay, here's the deal. This is last quarter. Now, last quarter was a weaker quarter, and since then we've gotten a lot of great news, which means this upcoming quarter is going to be likely very, very, very good. The weaker quarter, we still had, this is on a GAAP basis, generally accepted accounting principles, net revenues up 7%, operating income up 48%, EPS up 414% on a GAAP basis. Non-GAAP. So if you want to, take out one-time things and all that stuff, okay. 8% revenues were up, right? 20% operating income was up. Earnings per share up 24%. It doesn't matter which way you slice it. GAAP or non-GAAP, the quarter was phenomenal last quarter. And the best thing for PayPal is things have strengthened. How do I know things have strengthened? I'll show you how I know. Visa. Look at Visa and look at those earnings are reported. Visa fiscal Q4 earnings beat consensus on strong spending, cross-border volume. Visa numbers look very, very healthy, wealthy, and stealthy. Very good overall. And if Visa numbers are good, PayPal numbers are going to be good as well. It goes further than that. Meta, right? If Meta's numbers are strong, PayPal's numbers are going to be very strong as well. If Meta's numbers are weak, it's likely going to mean PayPal's weak, okay? Meta crushed expectations, and they beat on revenue by $700 million, right? So Meta's business is far better than analysts expected as well. We'll take it a step further. Amazon, massive e-commerce company, right? Amazon destroyed their earnings, and they beat on revenue by over $1.5 billion, folks, okay? So Visa earnings great, Meta earnings great, Amazon earnings great. I can tell you, likely PayPal, if anything, they're going to see strengthening in their business, strengthening their revenue profile, strengthening of their operating income, and strengthening of their net income and earnings per share as well, okay? Now, here's another phenomenal thing and another reason I'm not scared at all going into these earnings, okay? Even after this troubling time PayPal's had, which really is only troubling with their stock price, it's not troubling in their numbers, but this troubling time PayPal's gone through, okay? You know how many times they've missed in the past 6 quarters? They missed one time and only on the revenue item, okay? So you can miss on earnings per share, you can miss on, revenue, and so there's a 12 potentials there that you could miss on, and they've missed 1 out of those 12 in the past 6 quarters in this troubling time. And they missed by about $8.5 million revenues back in the 4th quarter of 2022, okay? So I'm looking at a PayPal that likely set up Alex Chriss, a new CEO, in a very strong position. Also, Alex Chriss, this is his first conference call. I'm very confident in his abilities, given the kind of pedigree he has in his background and whatnot as well, okay? So I'm not scared at all, right? Now, here's the next component I'm not scared at all, okay? this stock, it doesn't matter what happens with it. I'm set up perfectly. So let's say the stock goes up. Okay, cool. All my shares become worth more money. My account says a bigger balance. Great. Now let's say the stock goes down. It's even better. I'm not done buying PayPal shares. I want to at least buy PayPal for the next 2 months, but I'm looking to likely buy PayPal until at some point in the first quarter of 2024, I'll stop buying the stock and I'll have my position fully built out. So the bottom line is I have anywhere from 2 to 5 months left of buying the stock. Would I rather be able to buy the stock at $45, $55, $65, $75? Of course, I'd rather buy it at $45, right? So the best case scenario for me would be PayPal actually goes down, which creates another situation for me where I'm not scared at all. Because literally, go down, send the stock down. Beautiful for me. Let's say the stock stays flat. Awesome. I'd love to pick up more PayPal shares at $51. It's a steal deal. PayPal's going to 200 plus long term, in my personal opinion. So regardless of what happens with the stock price tomorrow, I'm set up perfectly. And let's get into this. So PayPal allays growth fears after raising annual profit forecasts. This is out of Reuters. So PayPal said they expected adjusted profit for the full year now to be about $498. This is versus $495 earlier was expected. And this versus analysts had about $492. So that's good. Also, even better is it looks like growth bottomed last quarter and looks like we're kind of trending up now. Total payment volumes got a nice uptick just on a sequential basis here. And then if you look at revenue growth on an FX neutral basis, also much stronger growth. So it looks like we likely bottomed out the growth numbers last quarter and it looks like we're headed up from here, okay? Now, if we look at non-GAAP numbers, which everybody cares about non-GAAP right now because you have a CEO and CFO transition for the company. We sold off the buy now, pay later European side of the business in terms of all those loans. So it's creating a messy GAAP numbers right now, very messy GAAP numbers. So if you care about PayPal, you care about non-GAAP numbers. Now, there's something very exciting, troubling, and exciting here, okay? Net revenues up 9% on a non-GAAP basis. We'll take that. Operating income is a little worrisome. Here's why it's worrisome. It was only up 8% versus 9% for net revenues on a non-GAAP basis. Now, what I like to see is I like to see my operating income for a company growing at a faster clip than revenues. I like to see my net income growing at even a faster clip than operating income. And I like to see my earnings per share, EPS, grow at even a faster clip than net income. That's the holy grail. So if we ever have a situation where my revenues are growing a little bit faster than operating income, I don't like to see that. The good news is it's a very small number. It's 9% and 8%, okay? So it's not like, if they were growing non-GAAP net revenues 9% and they grew 1% or something like that. That would be extremely troubling, okay? So that's just something we need to see better executed in future quarters. Earnings per share was up 20% on a non-GAAP basis for the company year over year. Total payment volume, 15% on a spot basis. FX neutral, 13%. That to me was one of the highlights of the numbers overall. Very strong total payment volume, which just goes to show the relevance that's going on in PayPal overall in their business model. So I really, really loved that. Operating highlights, $387 billion in total payment volume in the quarter, growing 15%. 6.3 billion payment transactions, that's up 11% year over year, which the simplest way to look at that is PayPal is far more relevant this year, right now, than it was at this time last year, which is great. Love to see it. 56.6 payment transactions per active account on a trailing 12-month basis, that's up 13%. So basically, PayPal, Venmo, their whole business model is more relevant now to people than ever before, essentially, okay? 428 million total active accounts. That compares to 432 million, right? Now, they got rid of some unprofitable accounts, is what they talked about on the conference call there. So, we'll get into the conference call and that whole situation in just a moment and what's actually going on there. Cash and cash equivalents for the company totaled $15.4 billion for the company. Debt totaled $10.6 billion, so basically they could pay off all that debt tomorrow, right, between their cash equivalents, and investments, and still have a ton of money on the balance sheet. Boom! Here's a boom for you guys, okay? They just bought back a ton of stock. In Q3 2023, they repurchased approximately 23 million shares of stock, returning $1.4 billion to shareholders, right? I hope they buy a ton more back in Q4, and I'm sure they will. On a trailing 12-month basis, they repurchased approximately 75 million shares of the common stock, returning $5.4 billion to shareholders overall. look at the adjusted free cash flow. The adjusted free cash flow, right? Remember, their cash flow is a mess right now because, once again, the buy now, pay later, sell off in the European business and all that sort of stuff, right? But their adjusted free cash flow, $1.9 billion for the company. It's a cash flow machine. Now, in terms of guidance, this is very, very important. So, they guided slightly, I mean very, very slightly under what analysts were expecting for revenue and very slightly under what analysts were expecting for earnings per share, right? Now, my belief on this, and of course the management team will never announce this, they got a brand new CEO. This is going to be his first quarter with the company, right? He just started at September 27th, if I recall, right? So this next quarter they'll report in February. That will be the first true quarter under the new CEO, right? Now, if you got a new CEO and then they also have the new CFO starting here very soon, do you want your first quarter as being a big boss, to be a miss? No, you're going to sandbag guidance, likely. So then you come in and beat, and you look like a hero. The worst thing you want to do is put expectations really high when you still got 2 full months left in the year, and then you don't meet the expectations, and then you get off to a horrible start as a new CEO, and people are like, dude, you put out this guidance and you didn't even meet your guidance. That would be worst case scenario. So in my opinion, sandbag it a bit, come and beat those numbers. You look like a hero right off the bat, and boom, we're off to the races, okay? That's my personal opinion on that. I think they sandbagged a little bit. That's just my belief, okay? Now, look at this. PayPal times Meta. Check this out in regards to PayPal and Meta's relationship, which, by the way, I love it when my companies are making relationships with each other and being friends, right? Meta is my number one biggest position in the public account, $567,000 position for me. We're up $344,000 on that stock, right? And if we look here, they're building a closer relationship than ever. Since 2010, PayPal and Meta, then Facebook, have enjoyed collaborating across various business and product areas. Meta began offering PayPal as a payment option for Facebook games to give their customers choice and flexibility in how they pay, and expanded PayPal as a payment option to their advertising business in 2014, followed by various customer use cases on both Facebook and Instagram. When Meta introduced Instagram and Facebook Shops, they engaged with PayPal to power the end-to-end payments experience for a subset of sellers. Meta also uses PayPal Hyperwallet for some payouts to their creator community in several markets. Recently, PayPal expanded their offering to Meta by enabling Braintree as a card processor for Meta's advertising business. Meta also utilizes PayPal Giving Fund to support donations benefiting nonprofits in the United States, United Kingdom, Canada, and Australia. By working together, PayPal and Meta are able to provide better experiences for their customers and support important causes through their charitable giving, right? And it just goes to show you how PayPal, Venmo, Braintree can all work together, and especially in regards to big customers like this, because there's really 3 prongs of PayPal, right? You have customer base in terms of individuals like myself. I use PayPal, I use Venmo, right? Then they have their small business and mid-sized business segment, and then on top of that they have their large enterprise, which is more of the Braintree side, right? Now, there's no transcript as of yet for the conference call. I heard some extremely important things on that conference call. Extremely important, okay? The first one is, listen, they sold that Happy Returns business. I thought, maybe they sold that for, $100 million, $200 million, $250 million, something like that. They said on the conference call they got over $450 million for that Happy Returns business when they sold off to UPS. I was like, okay, let's go, baby. And that money's going to likely be used straight for buybacks when the stock is at extremely depressed pricing like we have right now. I was like, great. There's 3 other core things that happened on that conference call. One is Alex Christ, he did a phenomenal job on the call. He said everything I could have wanted him to say. First thing is, he mentioned this several times throughout the call, driving profitable growth. That's what he is on. That's what he's talking about. His vision for PayPal is profitable growth, not just growing users to grow users so you can lose money on it. Profitable growth, which is exactly what I'm looking for. They also talked about the metrics. They're going to be showing off all new metrics in regards to the business and how they should judge the business moving forward. That's extremely important for Wall Street and how the analyst community views this company, and in terms of what to look at, how to model our projections out for this company. Extremely important. That cannot be overlooked. Okay, he was hitting on everything that would excite a retail shareholder and, in my opinion, Wall Street, which is that's the holy grail. Okay. They got a new CFO incoming who has a ton of experience, so I'm expecting her to do a very good job overall, okay? Third thing, and this is probably maybe arguably the most important of everything, he talks about a lean organization moving faster. He talks about the company's doing way too much right now. They need to basically put their assets in the best position possible, right? Which your assets are your employee force. And who does this sound like to you? Who does this sound like to you? I'll tell you exactly who. Remember my number one stock, Meta? Sounds exactly like Zuckerberg. He's talking about a lean organization, moving faster, focusing priorities on the highest growth, profitable segments for the company overall. It's exactly what I basically have heard from Zuckerberg over the last year. I love it, okay? Lean, mean organization, not as bureaucratic, move much faster, innovate, push these products forward, keep PayPal and Venmo, keep innovating to higher and higher levels, keep Braintree innovating to a much higher level. Absolutely freaking loved it. Loved it, okay? Now, next up here, my level of happiness after the earnings, because there's three components whenever a company comes out and reports. You have the earnings, right, the numbers, you have the guidance, and you have the conference call. I would say my level on a scale of 1 to 10, 10 being the happiest possible, 1 being the most disappointed possible, I would say as of right now, I am a 9. I'm a 9, okay? And the only reason I'm a 9 and not a 10 is I think that I wish the numbers could have been a little stronger in terms of on the financial side. I would love to see like 10% revenue growth, 11% revenue growth would have been great. But overall, I'm about a 9. The conference call couldn't have went better. It couldn't have went better. Everything that I want for PayPal, this man's putting in place for this company. And I absolutely love that. And this man comes over from Intuit, right? Intuit's one of the most loved stocks by Wall Street. He understands creating, you know what really hit me though on the call? He gets it. The man gets it. That's what really hit me on the call. When I say he gets it, he understands that he doesn't have to fundamentally transform PayPal, Venmo, and Braintree. He understands he's coming into a company that has a broken stock. So one is he needs to fix the stock, right? Which can also go back into stock-based compensation and help out the employee force and all sorts of things and keep and attract great employees as your stock does better, right? But he gets it. He understands I got to fix the stock. And so I'm going to start giving them metrics on how to judge this business moving forward. And they're going to start enacting that next quarter. That excites Wall Street. He also gets it that he needs to make small tweaks in the company, lean out the organization, and focus priorities really around PayPal innovation, Venmo innovation, and Braintree, and not all these other adjacent businesses and different things that PayPal was trying to do in the past. And so I was just like, he gets it, man. He freaking gets it. And so I will say my confidence level in him went up substantially. Now, in regards to stock price, okay, what am I going to do with the stock? What's my view on the stock price moving forward? Do I think it's going to have a huge, let's call it V-shaped type recovery now and those sorts of things, okay? So in regards to me personally, I'm going to continue to gobble up shares. After the conference call, after seeing the numbers, everything like that, I'm going to continue to gobble up shares. With this company at this valuation, I need to gobble up as many shares as possible over this next few months and maybe some long-term call options as well in regards to this one, okay? Do I think the stock's going to have a V-shaped recovery? I wouldn't say so. I don't think it's going to have a V-shaped recovery. I think it's going to have a recovery over the next year to 2 years. That's going to be a very gradual, very nice recovery, where next thing you know, you're going to see the stock back over $75, then you're going to see it back over $100, then you're going to see it over $125, then over $150. I do not think it's going to be up in a straight line, though. Okay, I think it's going to be some nice movements up, then a kind of a little, like, call it flat line period, then a nice move up, flat line. And I think as Alex Chris proves out in the numbers that he's executing on what he's talking about executing, I think that's as that goes along, you're going to see more and more momentum come in. You're going to see more and more Wall Street start to back the stock. You're going to see more and more analyst upgrades. You're going to see more and more price target upgrades. And then PayPal will have a very sweet, like 2 to 3 year run where the stock just, keeps kind of moseying higher and higher and higher. And like I said, it's not like a straight up like, oh my gosh, we're going to be $200 at this time next year. It's just going to be a nice gradual recovery over a 2-3 year span, in my opinion, as he executes, as the numbers roll in, as he proves that this company deserves a lot bigger valuation than what it's getting right now. That's a laughable valuation. And I think Wall Street will come back to this one. I think retail is going to end up making a fortune on this. And I think retail's smart enough not to sell their shares anytime soon. And I think retail will keep their shares for a long time, so that won't put selling pressure on it. And I think everybody that wanted to sell this stock has already sold this stock. And so I think, if anything, you'll just continue to get nice buying pressure that comes in this stock over the next, once again, several years in regards to this. This is no 1 quarter, 2 quarter type situation. So overall, I was not scared going into those earnings, and I left the earnings even more confident, which is downright scary.